All right, welcome back. Well, after a wild start to the year and that now infamous day where prices went negative, crude oil prices have been slowly creeping higher. We're at 5-month highs. It's largely not because demand is growing. It's because American oil production is going through what is no doubt a record collapse. New drilling and output both falling faster than a naked skydiver. Today, OPEC meets virtually, of course. Here are some of the key storylines around the meeting. First, there is concern the price risk for oil is likely to the downside, not the upside, in part because cracks in global demand growth are showing as economies either relock down or people simply don't go out. Next up, cheaters. Yeah, they're still cheating. Iraq and Nigeria likely still putting out more oil than they are supposed to under the quotas, which, by the way, has frustrated the Saudi leadership of OPEC, which is getting tired of carrying the production cut load. No doubt their patience wearing thin. Joining us now to talk more about this, Michael Bradley, equity strategist at Tudor, Pickering, Holt & Company, and one of the few out there, by the way, who's physically attended an OPEC meeting in Austria someday. Mike, I hope you and I can do that again as well. What are your expectations from OPEC today?
Well, Brian, thanks for having me on. I think this is going to be a really low-key meeting. The last couple meetings have been very contentious. You know, Saudi has been really pushing guys to get into compliance. I think that's going to be the focus again for this meeting, to get the cheaters, specifically Iraq and Nigeria. They're cheating by the tune of 400 to 450,000 barrels a day. And so I think that's going to be the focus of this meeting, getting those guys in line. How they do that and what the headlines look like in the next 2.5, 3 hours is going to be key.
And do you believe the price risk is to the downside, not the upside, even with, 2.5, 3 million barrels of U.S. oil coming off the market?
Yeah, I think near term, the markets are a little bit oversupplied. If we look at the Brent time spreads and like Dubai time spreads over the last, 4, 5, 6 weeks, they've been rolling lower, which tells you that the physical markets are getting weaker. And that's a combination of demand really kind of petering out here and supply being added to the market over the last month. So, with time spreads going lower, that just tells you the physical market is looser, which means OPEC's going to have to be more vigilant in their compliance here over the next couple months.
We just had Phil LeBeau on talking about how the expectations for flight growth is not that high. In fact, maybe not coming back as fast as some people thought. Jet fuel is likely the problem, is it not? We got a chart showing jet fuel and flights. And the reality is, even as people may be driving more in the United States, we're simply not coming back to the level we were flying. How much is that weak demand in jet fuel playing any havoc with the oil markets, Mike?
Yeah, I think it's a combination of jet fuel and just, MoGas demand. What we're seeing is, if you look at what's happened in the last couple of weeks, the last month or so, is there's been temporary refinery shut-ins and actually some total refinery closures. And that's just a combination of weak demand. We saw last night the APIs came out. We saw 5 million build in gasoline. And so global cracks are really terrible. And so we're going to probably see continue, refinery ramp down, which is bad for, crude oil demand. Yeah. And we're also going to probably see, closures permanently. And we've seen a lot of, announcements over the last couple of weeks of guys converting their refineries to biodiesel. And we're going to continue to see that as long as cracks stay low.
As oil production and new drilling collapses, and I don't think that's too strong of a word, that means less natural gas is coming out of the ground. Natural gas up 40% in a couple of weeks. Mike, I know you called this, you and I talked. Do you think that natural gas and natural gas stocks can be a moneymaker for the CNBC audience?
Yeah, I think crude oil and natural gas going into 2021 looks fantastic for us. I mean, you're going to have supply being contained and domestically, and demand is probably going to be increasing as we come out of a lockdown. And so natural gas right now, you're just not going to see, especially U.S. producers, they're not going to spend. Most U.S. producers are now saying that they want to spend 75 to 80% of their reinvestment, their CapEx. That's just going to lead to a big shortfall next year. So we're pretty bullish oil and natural gas next year.